In this video, we'll talk about something that's really important if you use the tool that I mentioned in this video, and the link to this tool is in the description down below. But if you use this tool to set up trailing stop losses or take profit or a smart sell or smart trade, there's really only one downside to this tool, well, other than it's not completely free. If it was completely free, that'd be awesome, but it's still worth the fee that it's charged because it makes you a better trader. It allows you to do a trailing stop loss to protect your profits or protect your downside. You can also do this really cool thing called a smart sell. So it's a really cool feature of this tool. So the link will be down in the description. But there's one major downside that I want to talk to you about that you need to understand. And we'll go through that now. I'll share with you why it's a downside and how to maybe look at it or prevent it or trade kind of with the downside, I should say. So here it is. So basically, to explain this, what I need to explain is that you can set up what's called a smart trade or a smart sell. And a smart sell, what this is that you enter what you want. Let's say I already have, so we have 36 RLC. These are basically free coins that we've acquired in trading. So when I say free, we've invested, we got our original capital back plus a little bit more, and these are coins that we just write up and sell at 130% profit or whatever. Whenever it gets pretty high, we sell these coins off, okay? So right now, what you can do is you can set up a smart sell. And basically what you do is you say, well, here's my entry. Let's say that this, I don't think this is our entry, but here's my entry. I want to sell this for 125%, and I want to give it a 2% deviation, okay? Now what that means is that this 2% deviation means is that when the price hits this level, it will then watch that trade, and if it's going up in price and it's going up in price, it'll keep moving this up by 2%. It also means that you could get cashed out at 123%. So that's the downside here, is that it might not catch the downside, but you get that deviation so that if it's getting the price action is really moving up fast, you can ride that up. This feature alone has made us an extra 6 to 20% on some trades. So it's a great feature, but there's one major downside. But let's look at a trade and talk about why that's a downside. So here's an example of why this would be a downside. And let me scroll in so we can make this a little bit bigger. Now we're looking at RLC, right? And so with RLC, we entered a position here. And for some reason, Coinergy doesn't show the entries. I don't know why, but it shows the exits. It's really annoying. But so here, for instance, we entered a trade, and then our exit was here, okay? Today, we entered a series of trades, okay, on a downtrend, and basically we exited in 3 places, right? So our aggregate entry was like in this range, okay, right? And then you'll see here our first exit was for 13%, our next exit was for 15%, and then our final exit was for 22%, okay? Now, we didn't exit our full positions. This is where the free coins come into play. So let's say that we took 100 100 units or whatever position here. What we would do is we would cash out various levels, or if we're at, like in this chart, this chart, we probably cashed out more just because our analysis of it. So as you see here, as this is rising up, one of the things that if you use this tool, the one thing you have to be mindful of is exits like this, okay? Let's scroll in. So you'll notice on every one of these exits, we actually exited on what's called a tail. See how the price action didn't close or open there? Now it did eventually get there on 2 of these, right? But we got exited out on this first one, okay? On this first price rise. Now this price was heavily rejected right away. And that was like within 20 seconds. It shot up and it was rejected. Now, because we had limit sell orders on the books, okay, this is important. We had limit sell orders on the books. We got picked up on this price movement up, okay? What this tool does, though, is it doesn't put limit sell orders on the books at this price value, okay? What it does is it watches the price, and when that price gets hit, it then puts a limit sell order on. So the challenge here is if you are looking to exit your trades and you're putting your exits in what you would think you'd be exited on a limit sell order in these type of price movements, you might not get exited. Okay. Hopefully that's clear. Basically it should be clear if you've been trading. And here's another thing I wanted to share why we did our exits here. Okay. So let's just share why we did our exits here, right? So basically, when we bought here, we obviously we didn't see anything from here, right? And then when we bought here, this was a flash. All alts were crashing at this point in time, so we buy differently when all alts crash. But basically, we bought here, and we looked at the chart at this point in time, and we said, okay, well let's put this was here. And we put our exit well below, what the previous point was. And even that percentage is still 20%, which is not bad. Not bad percent on a 4-day trade, right? So this one here would have been good for the smart trade because the price still had room to move up. And if we missed a price action like this, a spike like this, that smart trade for this tool would kick in, and then we'd probably be able to make possibly an additional percent or a couple more percent than we would have if we would have just exited. With an exit like you see here, okay, where we're looking to exit on a huge price movement up that maybe takes 30 seconds, the deviation or the lag in time between the communication between this tool and what's happening on the actual exchange usually is too long comparatively to how long this price is up here, right? And remember, it doesn't put a limit sell order on the books, okay? So if you're going to use this tool, which I highly suggest you do because it's an awesome tool, you use it in scenarios where when you do your analysis, when you do your exits, the best way to look at it is that you're looking at probabilities here, right? The probability of a exit on this trade, if we entered here, right, is higher given recent price action and a few other things, right? I'm doing this at a very, very quickly, right? Is higher likelihood of exit right here, right? I'd even say a little bit lower, I'd say. Higher exit. Now you're not making as much, right? So you're making 10%, which is great, or maybe a little over 10%, right? That's still a good return for a day trade. But if you use this tool, you maybe, if you did it on this bar, maybe the smart sell would kick in and you'd make another 4% or something, because it would be riding this up. But the problem is that this price action, this spike here happened so quick, it didn't catch up, and then you would have been exited. And so this is your exit, right? And then you would have been exited maybe right here when it finally calmed down, maybe additional 6%, which is great because that fit the deviation, right? So that's something to keep in mind. So sometimes it's not that big of a deal, but oftentimes if you are playing these huge price spreads and that works for you, it's better to use limit orders. And let's show another chart. Let's go to ZRX. ZRX is another good example. Once again, Coinigy does not show our entry, so let's just, I'm pretty sure this was today, so I'm pretty sure we probably entered right here. I would like to say that we entered right there, right? Most people would say, hey, I entered right there. That's where I entered, right there. I saw the bottom and I entered right there. We probably entered right around here. So we don't try to time bottoms. We probably had, because we only did one position here, so we, let's say we entered right there in the middle. And we exited. See where we exited? We went a little aggressive with this exit. We exited above a couple different price movements. So we exited a little aggressively because if you see here, our exit is not even near a close. None of these hour candles closed in that range. Now we trade ZRX every day, so we know the ZRX price action pretty well. Still, this is a higher risk exit than something along this line. Price has already been here. Price action's already been here. And look at how many times it's exceeded that. It's tested above that, right? So this is a safer exit, percentage wise. Okay, percentage wise. So I just mentioned that because once again, so here's how to use the tool actually. Let me explain that. So what you could do, and probably the smart way to do this too, is that you can put your exit right here. Okay, you put it in the smart location, right? When I say smart, the statistically probable better location based on what price action tells you. That's kind of a jumbled way to say the best place to exit. But looking at charting, looking at the analysis, looking at price action, and my expectation is that we're going to exit on an uptrend, right? So statistically, where's that medium between profit and I'd say not a safe exit, but a probable exit, right? Would be here. So you could do the smart trade. If you did ZRX, we probably don't have any free coins. Yeah, so we have all coins in play in ZRX. Okay, so you could probably put a smart sell right here and then put a deviation of 2. Now the challenge is that you might be exited instead of here. You could put a deviation of 1 and then you might be exited 1% below, or you'd have the opportunity to possibly ride it up. Now it only went up another 1.5%, so you probably would have been exited right around here, just a little above, right? But that's one way you could use this tool, is you just are very mindful of your exits, and you do not put an exit here. So on ZRX, the bad move would have been to use this tool is to put your exit here. Like, ignore this. Act like that didn't exist. That didn't exist, and you just bought your position, right? This is what you see. Well, this is an aggressive exit. This is probably better, a little bit better, because price has jumped, has tested that level 4 times. This is more of a this down here is more of a probable better exit, I should say. I'm really mindful of the terms and phrases I use because it's important. Okay, this isn't like, there's no safe trades, so I don't use this as a safe exit because there's no such thing as a safe trade. Okay, so it's all about probabilities. But you'll see here, this is what you're seeing, right? You're seeing this. You exit here. This is where you'd put your smart sell. So at the 10451, so if we go here, you would put it at 10451 here, and then you maybe put a deviation of 1%, right? And then you're in that price range. The challenge is if you put it up here, if you said, look, I'm gonna really go here and go to the kind of the top range of where the price has reached recently, I'm gonna put it at 10662, right? Satoshis. You're risking, if you use this tool on a smart sell basis, you're risking that the deviation in time of that price action moving up there and then shooting back down, you're not going to get a limit order in time. That tool is not going to communicate with the exchange in time. Okay? So while it might have shot up there, and if you had a limit order on the books, you would have been exited, you'd still be in this trade right now, waiting for that price to scale up. Now, at a long-term perspective, let's look at a long-term. Just look at this and look at this if you were trading more of a long swing, right? Well, we're kind of in the middle of a value area right now. We're at a low, right? Yeah, so see these sells here, this is a good, I always go on tangents in these videos, so I apologize, but these sells here, these are what we call free coins. And what I mean free coins, so basically we acquired these coins probably way down in here, right? So we acquired these coins down in here and we traded them. So basically we would make, 20%, 10%, and then we won't fully cash out of our profits, right? We'll keep those. And then what we'll do is when we identify a profit level, we'll sell those coins at 230%. We'll sell them at 250. Some of these were acquired here as well. So we'll sell it at 61%. Some of them probably were acquired here. So we might sell it at, usually we would go higher than that. So usually what we would do is we target about a 40 or 50% range. So coins that we acquired here would be at a 50% range based on this chart. So we look at this chart and say, well, is there a probability that this high is going to be made again, right? Is this high going to be made again? Yeah, so the coins that we acquired here that are still kind of locked in profits in a way, well, let's set our exits here, right? So, you know, let's make 53% on that remaining profit that we have in there. Basically, it's free coins because our original capital is out, okay? So that's what these positions are here. So we're just waiting for those. Now, what I think we'll probably do is, well, I don't think we can do that. Maybe with our test account, we might buy some coins and we're going to test this model of our free coins because we haven't done that yet. What we haven't done is, okay, let's put our profit level, like we probably acquired these here. Let's put our profit level at 50% and let's put a deviation. This is what I think will be interesting with this tool, is that let's put our profit level at, you know, I don't know, 60% or something, and let's put our deviation at like 5. That means basically we could be cashed out at 55 or we could be cashed out at 65. And so there's a I put 4 there. There's a 10% window there that we're playing with in price action. So that to me is kind of exciting for the free coin aspects of what we're doing too. So that's something I'll do another video on that once we kind of fully explore that option. The key here, and I just went off on tangents, so I apologize, is that if you use this tool, which you should, so the link is in the description. And yes, it's an affiliate link, so I should have mentioned that before. So links in the description. So if you use this tool, be very mindful of your playing price actions that spike up real quick and there's a deviation in time, okay? Be very mindful of that. That's why we didn't use this tool on these exits, because in these exits, we were actually playing that price movement. I've noticed, you'll see here, it's pumped over the last couple days, right? We've seen it pump over the last couple days. And RLC is one of those things that likes to pump over a couple days and then it kind of goes silent, right? So we looked at that and we just said, okay, let's put our exits accordingly. And this trade worked out for us, okay? So hopefully that's clear. If it's not, leave a comment down below. You can definitely join our Discord group by going to the link below. You can follow me on Twitter. Any questions you have, you should really look at this tool. It protects your profits. It allows you to make additional profits. If you have any questions, join the Discord group and just ask away. I look forward to seeing you in the next video.